Hey everybody, happy Sunday to you. I just wanted to do a quick video regarding some recent trades that I took on the Euro-Japanese currency pair. I just want to start off by saying this video is not trading advice in any way. It's just for educational and informational purposes only. Trading Forex involves substantial risk of loss, and it's necessary to get proper advice. Okay, so I have the Euro-Japanese currency pair on my chart here. Just going to zoom out a bit. Just wanted to go over some trades that I took over the last couple weeks on this currency pair. It's been trending nicely, like most of the Japanese currency pairs crosses. So you can see earlier, the last couple months, it's been caught in kind of a range-bound range here, outlined with the blue horizontal lines. Finally broke out of that range around November 15th. So I'm just going to zoom in here. Get rid of this Fibonacci for now. The green lines on my chart here represent spots where I went long, took various entry orders, and I'll explain those as I go along here. The first order, to be quite honest, I didn't get in at the best price. I got in outside of this range once it started going long. I could have waited a little longer on the pullback and got in at a better price in hindsight, but in any event, I got in at 117.12. The way I've been trading trends lately, I've been using the approach, or some of the ideas, by Sean Campbell. It's called inventory trading. And if you check out my blog at myforextradingblog.net, I did a review on Sean Campbell's inventory trading quite a while ago. So feel free to check that out if you want some more information on that. So basically, using some of his ideas, what I do is I wait for structure to be broken. So there's a potential trend. When a recent swing high is broken, I set a buy stop order above the recent swing high. So I got in another small position here at 117.50. Waited for price to trend in my direction, and at that point, once price is going in your direction, you're basically going to be using two types of order: buy stop orders when another swing high is broken, but before then, you're also going to be looking to get in on when the price is on sale, or on pullbacks. And I like the way Sean Campbell approaches this. He uses the Fibonacci tool, and if you're not familiar with the Fibonacci tool, there's lots of great information online. You can check it out. I'm not going to get into that here in this video, but so what he does is you're in a trade, and then price will always retrace at some point. It never goes in one direction indefinitely. So in this case, waited for the price to retrace here. You set your Fibonacci tool at the starting point is the recent swing low. If you're in an uptrend, set the other second point of the Fibonacci at the swing high. So you're setting buy limit orders at various spots. I was a little bit more aggressive on this. I set a buy limit just around the 23.6. So I took a long position here. I also had another buy limit order at around 38.2. Took another position here. So by this point, I actually had 4 entries long into the market. The original 2 entries here, and then 2 buy limit orders got filled here. Price actually never retraced any further than the 38.2. If you want to be a bit more conservative, you can set your buy limit orders potentially at the 50, the 61.8, or the 78.6. The further down you set your buy limit entries, the tighter your stops are going to be, because where you're going to be having your stop using this method is under the most recent swing low. Okay, so if you got in at a price retraces far enough and you get in at say a 78.6, you're going to have a nice tight stop here and minimize your risk. The other thing I would say about this strategy is, and Sean Campbell advocates this, is you're going to want to use very small position sizes. You want to limit your risk. Some of your stops are going to be larger, especially if you're taking a more aggressive approach like I did. If I'm getting in here, my stop is quite large. It's almost 300 pips, and a lot of people that's just too much for them to stomach, and that's understandable. So definitely, without a doubt, the one thing you're going to want to do is use a very, very small position size. personally, I don't like risking more than 1% on any one position or any one trade. Okay, so small position sizes. The other thing, so as price does move in your favor, assuming it does, the other thing with this methodology is once a swing high is broken, you're gonna, I'm getting in with another buy stop here. I got in at 120.23, but when that happens, what you're also going to do is moving your stop to the recent swing low. So you have a new swing high that's broken. Now you have a new swing low that can act as your stop level. So I'm moving at this point. Once price broke this swing high, I moved all my stop losses to this level. What that did is lock in profit on these two positions. And it minimizes the potential risk on these positions as well. Now, ideally, you're going to want to ride the trend until it's over. The trend is your friend. These old sayings, you ride the trend until it bends. There's a lot of wisdom in those. In this case, though, I ended up getting out at my red line here, which is about 121.55. I got out last Thursday, and a couple reasons for this. There's expected to be an Italian referendum vote, I believe it was, this today. I didn't really want to have my trades open over the weekend with that happening, just in case there was a ton of volatility. All my trades were in profit. I was happy about that. I decided to play it safe and get out with a nice profit on the Thursday before the weekend at this point here. So we'll see what happens when the market opens later on today. It's Sunday, to see whether that Italian referendum causes a big gap or not. We'll see. But never a bad idea to play it safe, especially if you got some nice profits, and there is a big news event that's going to be happening, just to get out. So again, this is not trading advice, but if that news event wasn't happening, I probably would have stayed in to see how long this trend can continue. Continuing to move my stop up. How many positions I'm going to take in this trend. I guess it all depends on your risk tolerance and your comfort level. Eventually, if you have multiple positions and they're all in profit, and for me, say for example, if the trend's already gone, 1,000 pips or so, at some point you're probably going to want to shut it down or manage the stops very tight, just to minimize your potential downside. You don't want to be giving too many profits back to the market. So again, feel free to check out my review of inventory trading on my blog. I did that quite a while back. myforextradingblog.net. And I hope you enjoyed this video. Hopefully it gave you some good ideas on how to trade trends. And if you liked it, feel free to comment, share, and like. Have a great weekend.